Greetings, welcome to my weekend market recap, 16th April 2023. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID info@superiorprofit.co. I regularly share live stock and market analysis on my website superiorprofit.co, Twitter handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use the Q systems to make trading decisions. All the Q components run on the Metastock platform and the technical analysis component runs on TradeStation as well. That was the last slide. Let's continue with a look at the global markets, and later on I'll look at the USA market, starting with Australian index all ordinaries. And while I do that, I will also look back and analyze how I looked at the market the week before and how it played out. What is the direction of all ordinaries? It is inside a range, both in daily as well as in weekly chart. Last week it was right in the middle of the range. I didn't have any preferred trading direction. It has gone up somewhat, but it is still far away from the upper edge. Therefore, there is no low risk entry point now. There is no short setup. It is looking bullish in weekly daily. However, it is also above the upper boundary, and the stretch indicator is showing that it is overbought for too many days. For me to buy now, I would have bought at the lower edge of the range. It is range bound and I have no preferred trading direction. Let's look at Japan's Topix index next. Topix index flipped from magenta color to cyan color this week in the weekly chart. In the daily, it recovered from below the lower boundary, then it pulled back little bit, created a higher low and went up with a bullish flow momentum signal on this day. The candle shape itself was indecisive, doji candle. Therefore, Topix itself did not have any flow buy setup on this day. However, looking at the bullish flow and a higher low, you could look for fundamentally strong stocks that were going up with a bullish shape candle also. If you did that, probably you would be in a profit by now. For Topix itself, I will not buy now. It has already gone up significantly from the recent swing low. That does not give a low risk entry point, and I always avoid taking a trade if the entry point is not low risk, that is if the stop loss is so wide as it will be if I took a trade on Friday. So it is looking bullish in weekly, daily both, but there is no low risk entry point. Next, China's CSI 300. CSI 300 is inside a range in both daily and weekly. The weekly range is very narrow. coming to the tip of the triangle pattern. There is no preferred trading direction in this symbol also. I'll wait for it to break out to the upside or to the downside. To the downside, it has to break down below the second trend line support for me to start looking for short trades. To the upside, there is only one trend line resistance. If that breaks, I may look for buying candidates. Right now, no preferred trading direction. Next, India's Nifty 50 index. This is also inside a range in the daily, far from the recent swing low. Stretch indicator is showing it is overbought for too many days to buy now. It is also near the at the upper boundary and near the trend line resistance. That's not a place where I like to buy. I would have bought at the lower end when the candle turned green after displaying a cluster of bullish indecision. That would give me a low risk entry point. I would not probably buy Nifty index itself. I could look at fundamentally strong stocks going up at that time, but now it is too overbought at the market level for me to buy any stock or the Nifty itself. And lastly, UK's FTSE index. Bullish in weekly. We have to say it is bullish in daily, going up almost in a straight line. However, this is also overbought close to the upper boundary, and the stretch band indicator is showing overbought condition for several days. Not a place where I like to buy, and I may look for shorting provided this trend line support is broken. That is not broken now. I may wait for that, and if that happens, then I may look for shorting candidates in the UK market. So far in none of the global markets I have a preferred trading direction, and we'll see in the USA market I am holding the same view. In fact, if you watched my last 2 weeks market recaps, in both the previous weeks I didn't want to buy or I didn't want to short. I didn't have any preferred trading direction at the market level, and that condition may be valid today also, third week in a row. I will therefore again probably not look for buy setups or short setups, not too many anyway, if any at all. I'll see if I have time to do that, to look for stocks, but I will look at some signals that are flashing on the Q systems. I don't have time to look at all the Q components every week. I look at some more components today probably. Let's first look at the market's external view using the market ETFs, and I'm switching to TradeStation now from Metastock. SPY is right at the trendline resistance. It tried to go above the trendline resistance but pulled back, closing right below the trendline resistance, and that is why I say that I don't buy if the instrument is just below a trendline resistance. It pulled back, and because of SPY being inside a range for this week, and this is the third week in a row, inside a range and close to the upper edge of the range. Because of that fact, this is the third week in a row I have no preferred trading direction. It was going up, but I didn't want to buy. In the daily, I see a bearish indecision at the top on Friday. That's not a bearish signal, it is an indecisive signal that comes at the top. When I combine that signal with the price closing right below the trend line resistance, from a trading point of view, I'll be happier to see SPY coming down next week. That will give me very low risk shorting opportunities. On the SPY itself, it will be using the concept of bounce short setup. Using the concept, not exactly bounce short setup is there now, but if it reverses down from weekly trendline resistance, probably many individual stocks, weak fundamental stocks, will give low risk short setup. I also noticed that the jump thrust indicators are approaching a level from where it is likely to pull back. Has not hit the cyan color on both the indicators yet, hit that on thrust, not on jump yet, but if it reverses from the trendline resistance, I think I'll be happy to look for low risk shorting opportunities. Right now, too close to trendline resistance to buy and no short setup yet. So no preferred trading direction. QQQ, this was, and this is the strongest of the market ETFs, and when the strongest of the market ETFs moves in this pattern in the daily chart, that is not looking very bullish. Yes, previously it has gone up, weekly has only trend line support, daily is in an uptrend with high low, but for the last several weeks it's not able, not going anywhere. And like SPY, QQQ is also hitting jump thrust high from where it may pull back. For last 2 weeks, I did not want to buy QQQ also because it was already too close to the upper boundary. That view is remaining valid this week also. If I clear the drawings and draw this watermark resistance now, as a trader, what will I prefer? I will prefer QQQ to come down below this watermark resistance. That will create a false upside breakout, and that may give me once again low risk shorting opportunities. On the upside, if it goes up, that will not give me easy buying opportunities because it will hit upper boundary, that's an overbought area. I will be reluctant to buy, but if it breaks below watermark resistance, I will be happy to short. That is how I can anticipate a move. Other Q traders can do the same, and if that move materializes, we are a little bit probably ahead of others to trigger the trades. We may be ready with some of the trades for such an eventuality. Dow Jones Industrial Average ETF next, DIA. Again, both 1 week ago and 2 weeks ago, I didn't want to buy DIA, though it was going up, because it was inside a range and it was in the middle of the range and then going up. The low risk opportunities would have come at the lower edge, not in the middle area. And once again, you can see why I avoid buying just below trendline resistance. DIA stopped right at the daily as well as the weekly trendline resistances. On top of that, DIA displayed a bearish headwind signal. You can see the previous bullish headwind signal pretty much caught the bottom. Will the bearish headwind catch the top? That I don't know. There is no headwind short setup if you applied the checklist conditions on daily and weekly together, but the headwind signal is there. That is a cautionary signal and that is coming at trendline resistance. Once again, from a trading perspective, it will be easier for me to trade in the short direction if price can go down next week. That will give me very low risk shorting opportunities. And lastly, small cap ETF IWM. This is also inside a range, a wide range in weekly, daily both, and unlike the other market ETFs, it is not at the upper edge of the range, it is in the lower half of the range. This is the weakest of the market ETFs. None of them are telling me to buy. Now QQQ is the strongest, and it is probably because of the mega caps holding up better. If you watch the market on Friday, let's look at the Q Elite market breadth chart, real-time charts. This I always keep running on one of my monitors when I am trading. Here I can see the Russell 2000, Dow Jones Industrials, Nasdaq 100 and S&P 500 futures. Their candle charts are there using 10-minute interval in the afternoon session and 5-minute interval in the morning session. But on top of that, what is important, why it is called breadth chart, is because it has many internal studies. The tick, then advanced decline and up down volume. See how Russell 2000 very fast came below the early range low. Tried to go up little bit, stopped at this yellow pivot line, sharply reversed, and throughout the day continued to go down, and the internals, advanced decline and up down volume, both were weak throughout the day, which is very different from Nasdaq 100. This is not the entire Nasdaq, not Nasdaq composite, Nasdaq 100, heavily weighted by the mega caps, market cap weighted, heavily influenced by the mega caps. It tried to go up, displayed the bearish headwind at the very top, reversed, but then recovered significantly, closing inside the early range. SPY, S&P 500 futures here, tried to go up, displayed bearish headwind at the very top, reversed sharply, however recovered to close inside the early range. And Dow Jones Industrials tried to go up, displayed a bearish headwind at the very top, reversed sharply, recovered somewhat, but closed well below the early range low. So internally also you could see on intraday chart on Friday that Nasdaq 100 was stronger. Now if you are trading futures, I do sometimes trade futures, looking at the sharp reversal and the bearish headwinds in multiple signals, which one would I short? I would short the weakest one. When I take futures trades or stock trades also, if there are multiple similar instruments and I am shorting, I want to short the weakest one. And which one was weakest was very clear from the internal breadth indicators as well as in the candle chart. So I would have shorted Russell 2000, and the risk could be from the entry point to the stop loss. At the lowest point, the reward was much more than that. So you could have a profitable trade in Russell 2000 futures. I wouldn't short the other futures because if I am shorting, I want to short the weakest ones. Now let's look at the breadth signals on the daily interval using Q market breadth. not the single chart view. Let's look at a Twitter post I submitted just a while ago. This is based on Friday's close. This is more detailed market breadth study. Again, looking at those same futures or ETFs, you may say, Russell 2000, Dow Jones Industrials, Nasdaq 100, S&P 500, and also S&P 1500. 5 major market indexes. Their candle charts are here, daily interval. And more importantly, this is called breadth charts because there are a lot of breadth inside. Now, if you see the important indicators, this 3-month new high low, whenever it hits the lowest threshold or highest threshold, it tends to reverse. Dow Jones Industrials is hitting the highest threshold. It's too overbought. Nasdaq 100 is also at the overbought threshold level. And S&P 500 was also there. It pulled back somewhat from the overbought area. What is similar between these three instruments? They are easily influenced by a handful of stocks. Why so? Dow Jones Industrials has only about 30 stocks, not market cap weighted, but only 30 stocks are there. Nasdaq 100 has more stocks, but it is market cap weighted, and the mega cap stocks are here. So it is easily influenced by the mega caps. And S&P 500 is also market cap weighted, affected by mega caps, large caps. It hit the overbought area, pulled back somewhat. What about S&P 1500? That has pulled back below the midpoint, never hit the overbought level. What about Russell 2000? Only small caps, so market mega cap or large caps cannot influence it so much. Only small cap stocks could not go anywhere close to the overbought area, made lower high just above the midpoint, and now tilting down. What it is showing is that in terms of 3-month new high low, the market indexes that are easily influenced by handful of stocks, they are holding up. Broadly, market strength is not there. Neither there in terms of S&P 1500 and certainly not there in terms of Russell 2000. When you look at 3-month new high low. And a similar conclusion you may arrive at looking at the new high, new low percentage. Dow Jones Industrials is quite high in terms of the pattern of the indicator. Nasdaq 100 is high, but it is making a lower high, which is showing a bearish divergence. S&P 500 is less high than Nasdaq 100, also showing a bearish divergence. S&P 1500 is more weak, and Russell 2000, instead of new high, I can see new lows are starting to increase. So in terms of all the breadth indicators, if you look at these charts carefully, you will see that the market is held up by handful of stocks. That is the insight you can get from these market breadth charts. Now let's look at the single page market breadth total view. Here if I look at the percentage of stocks above 50-day MA hit the oversold level, at which point 3-month new high low also hit the oversold level. From there, price has recovered. Percentage of stocks above 50-day MA recovered to come to the midpoint. And now if it tilts down, it will confirm the downtrend. This is a breadth study, but if it was a single instrument, you would think of it as an instrument coming to the downtrend, recovering to the mid Bollinger Band or middle of the envelope, middle of the boundary lines in Q charts, and then tilting down again, resuming the downtrend. But this is not a single instrument study, it's a breadth study, but in terms of breadth also came down, recovered to midpoint, and if it now comes down, it will resume the market downtrend. The same thing is true for 3-month new high low. Hit the lower threshold, oversold level, recovered, did go above the midpoint. Now it is struggling to go up. If it tilts down below the 50% level, 3-month new high low, that will also show it is resuming the downtrend. Another interesting thing I noticed, though Thursday was very bullish in terms of market ETFs moves, in terms of accumulation count, it was very weak. So weak that I didn't want to buy at the end of the day. When I had these charts available, there was no reason to rush into buying on Friday because Thursday internally was not really that strong. Accumulation count was only one, and that came from Dow Jones Industrials, the smallest of the market indexes in terms of number of constituent stocks. That was not showing broad bullishness in the market on Thursday, so I didn't want to buy much. I did share couple of trading ideas on Thursday that was based on the morning session moves. And no harm looking at them. Let's review them. On Thursday at 11:30, around 11:30 a.m. New York time, I shared this post and I did trade it actually. EXC. It is a defensive sector stock, utility stock. And I noticed utilities sector and the stocks industry was weak in the morning session. It was not going up. See, this is happening on Thursday when the market is moving up sharply. Thursday closed very bullishly. However, this stock in the morning, instead of going up, went below early range low. And I shorted it somewhere here. If you looked at EXE, it did not have any short setup on Wednesday. So I was anticipating a short setup at the close of Thursday, and I was precisely taking the trade using real-time charts. Now, once it came down so much, my risk distance was easily covered. This was the risk distance, reward was about twice that or maybe even more. So I had booked partial profit at that time. And for the day following Q guidelines, my stop would be just above day's high, which was also early range high. So I booked partial profit, put the stop where I should put it for the day, and I went to sleep. And it was good that I followed the discipline of booking partial profit because EXE, and remember it's an utility stock, that's a defensive industry stock. The market was going up and the defensive stock was going down. Those were in sync. So I took that trade using real-time charts and it went up sharply into the close. So let's look at Thursday's candle. It closed up sharply but still below Wednesday's close, and it still came down with very high volume shown by the dot on the activity indicator. But it had hit my stop. So my remaining position was closed. I had a small net profit in the trade. And now if you see the weekly daily chart, why I shorted it? I shorted it in anticipation of the stock coming below the weekly trend line resistance, thereby creating a false upside breakout. Remember, that's the exact scenario I am anticipating in multiple market ETFs. DIA, for example, is right at trendline resistance. If it comes down, it will create a false downside breakout. In anticipation of that, using real-time precision entry chart, I took a trade. I came out with a profit because at the close of the day, there was no trade setup. The candle shape was bullish. So that's fine. That's how I took the trade and booked a small profit. And that shows how you could use the real-time charts to anticipate a move and take a trade. But if the move does not come true, you and I are supposed to exit the trade. So my trade was exited anyway using the stop loss that I put on the remaining position. So that was one trade idea I shared on Thursday on Twitter, but actually I also shared it on my website in more detail. Let's look at them. So we'll see how with discipline I applied the Q360 degrees analysis. The technique is very important. If your technique is robust, the profit will come if you're following the technique with discipline. See how I looked at the stock at that time in real time. Electric utilities, EXC's industry was one of the worst performers, bottom 20% in terms of score and also bottom 20% in terms of deceleration, acceleration, deceleration in terms of pace. And though the market was very bullish, this industry was coming down sharply. I found this stock. This stock was medium valuation but high negative earnings growth, high negative revenue growth also. And as of the morning session, on a bullish day, 88% of peer stocks in electric utilities were down. So fundamentals, industries both allowed me to short. And in the chart, this is what I saw in terms of daily weekly chart. As I explained, I was anticipating a possible false upside breakout at trendline resistance in weekly and false upside breakout at multiple watermark resistances in daily. So that was my basis of taking the trade. It also had a bearish flow. It had a bear release. This shows that we are okay. I am okay. QCS traders are okay to take a trade using real-time charts. But if the setup is not confirmed at the close of the day, we may exit the trade, as I did also with discipline. This was the real-time chart that I used to enter and exit the trade. So that was one bearish trade I shared on Thursday. And on the same day, I shared two bullish ideas. I shared them on Twitter. I used the technical charts only in tweets, but I may delve a little bit deeper on these stocks today. On the market itself, I am neither bullish nor bearish in terms of preferred trading direction, so I am spending more time on the techniques once again. See how I chose the stocks. INVA. This is INVA, healthcare stock. It pulled back, came below the lower boundary level, and from there it started to go up with a support from memory trend line. And on Thursday when I shared it just before the market close. I took the trade using real-time chart. So I had taken the trade earlier using fine-tune chart. I was checking if it confirms the bullish setup at the close, and it did. On the daily, it not only was closing with a bullish shape candle, but with a possible flow trend following long setup, and it had a big move up 3, very strong bullish move. It also had a bullish reversal candle. Let's look at this stock's fundamentals. INVA. While Vital is retrieving data and calculating the scorecard, let me go back and look at the second healthcare stock I shared. That was GMAB. One thing that was common between these two charts was this big move up 3. Very strong bullish momentum. And you notice this stock was also in a downtrend. Then it started to go up with memory trend line support, and that was the day it was breaking out with big move up 3 for both the charts, both the stocks. If you looked at their weekly daily, let's do that. Let's look at inva.o. As of Thursday's close, we had a bullish flow, and the weekly candle was already bullish in color, so that confirmed a flow trend following long setup. And notice it is hitting the upper boundary, but that is allowed for flow long setup provided the stock was in a downtrend, and just now it is starting to move up. So I took a position in the stock. I used real-time chart so I could enter somewhere in the lower half of the candle. On Friday it pulled back little bit. It closed with an indecisive shape candle. Stop would be below the trend line support, so stop is not hit. And the other stock was GMAB. This stock also gave a possible flow long trade setup. Weekly was already bullish, so that confirmed the flow setup, and though it is above upper boundary, it is allowed to take a flow long setup above upper boundary if it was before in a downtrend and just now starting to go up. So I took a position in GMAB also, GMAB, somewhere in the lower half of the candle using precision entry fine-tune chart. And on Friday it gapped up, closed also higher than open on Friday. So I have increased profit in the trade, and between the two trades I have a net profit also. Notice on Thursday using real-time charts I shared two bullish ideas. They are in net profit together, and notice also I chose healthcare sector, which was weak for a long time, and these two stocks were in a downtrend just now starting to go up. All those were positives. They were both going up with big move up 3, meaning not small players like me are buying it only. There are other bigger players buying the stock on Thursday. And if you look at the fundamentals, INVA, value stock, negative earnings growth, but that's fine. Based on valuation, I can buy. And I also noticed that funds are accumulating. That was one factor in my decision making. And if I look at GMAB, no, notice this percentage is as of Friday's close. I bought it on Thursday. At that time, this was very bullish. If we look at the industry score, you can see on Thursday it is very weak. Sorry, on Friday it is very weak, but on Thursday it was stronger. I bought it on Thursday. And let's look at the other stock GMAB, and you will see in terms of fundamentals also there were some similarities. Both industry were strong and both had big move up 3. In terms of fundamentals also, you see both of them were value stocks and both of them had fund accumulation. Those were the things I looked at, and I bought these stocks in defensive sector. Net profit, and the short trade in EXC I closed with a net profit, small net profit. That is how I am aligning the forces. Whatever be the market condition, I am aligning the forces from industry fundamental technical levels and preferably with the market also, market being in favor. I am taking the trades, and if you do that, I always say it's difficult to lose money. If you do that and if you follow risk management with discipline, you establish a preferred trading direction first. Sometimes it may be at market level, sometimes it may be at industry level. For example, when market is bullish, the defensive sectors may be bearish. Not always true, but may be bearish. So you may keep that in mind and choose to short defensive stocks when market was going up. As I did on Thursday, I shorted a defensive stock that was utility stock and I bought non-defensive stocks, healthcare stocks when the market was going up. That's how I'm aligning market forces also in my favor. Now let's look at the market from this week. I reviewed some of the, I think all the 3 trade ideas I shared recently. Those were the only trade ideas shared recently. Let's look at the market. We looked at the external view. We looked at the internal view. The market breadth view is showing that it is not so bullish, right? On Thursday accumulation count was only 1, that too from Dow Jones Industrials, and we saw from the major market indexes market breadth to it, that layout, that market is being held up by handful of stocks. What is the information we can gather from sector industry stock advance decline? 1 month and 10 day, the longer term periods are bullish. 5 days also bullish, medium term. 2 day is also bullish, but 1 day is bearish. So on Friday, market came down. This is kind of looking inside the market, not the external view anymore. It is sector industry stock advance decline. That is looking weak. And we saw several market ETFs are at trendline resistances. That is DIA and SPY. On Monday or next week, early next week, if market starts to go down, this is also telling us that market going down will be easier to trade in terms of preferred trading direction. Is the market bullish? Yes. 65% of stocks are above mid-Bollinger Band, but it is not overbought, certainly not oversold. Bullish overall, but on Friday it was bearish. So we may look for, I may at least look for shorting candidates if the market goes down. Again, if market goes up, I will not find easy buying opportunities. Not so many low risk buying opportunities may be there. What about technical breadth? We saw sector industry stock advance decline breadth for the week was bullish, and technical breadth for the week is also bullish overall and across all the categories also. Overall 66% of technical weekly signals are bullish, and strength signals are also bullish overall. Trend continuation, trend reversal, everything is bullish overall. There is not enough percentage of bearish headwinds as well. This is in sync with QH sector industry stock advance decline breadth. And if I look at the daily signals, technical breadth, that is bearish across all the, okay, not strength. Strength you may say is neutral. but other categories are bearish and overall it is quite bearish, and here we have large percentage of bearish headwinds as well. This is again in sync with what QH is showing in terms of sector industry stock advanced decline breadth. So this is telling us that it is easier to find shorting opportunities next week if the market goes down. I have some time now, so let's look at some of these bearish headwind stocks, see if they may give low risk shorting opportunities. Let's look at the bearish signals flag for the 41 stocks that gave bearish headwinds, but I want to also check their fundamentals first before doing anything. So let's carry out a fundamental scorecard analysis of these 41 stocks using Q Vital. This is the scorecard. Let me look for at least 1-star red candidate, that is either overvalued stocks or stocks with negative earnings growth. And I see there are some stocks with both negative earnings growth and overvaluation. Why not then click for 3-star? I am left with 4 stocks. Now let me open these charts. This has a bearish headwind. This is ACCD. However, it has a trend line support nearby, so I'm not going to consider shorting it. Close it. IN, sorry, not I, NSTG, Nano Storage Tech, something like that. NSTG. This also has a bearish headwind, but again it has a trend line support just below the low of Friday. Not going to short it. Close it. H. This is Helka Mining. Sorry, not H. HL. I'm reading not correctly. HL. This has a bearish headwind. Another one here. This also has a trend line support. But this I will like to short if it breaks the trend line support, because that may also come down below the watermark resistance, creating a false upside breakout. And I noticed, see how fast I am reading the chart, few seconds only, and you will get used to reading the charts equally fast because all are color coded. It has hit jump thrust high for both the indicators, that is too high a level. The up move is usually unsustainable. And for me, most importantly, if it breaks down below the trend line support next week and it creates a false upside breakout, my risk will be very narrow. And remember, it's an overvalued stock with negative earnings growth. Technicals looking weak on daily, but I will like to look at it using weekly, daily also. Let's do that before confirming if I would like to short it. Okay, weekly is also near a watermark resistance. If next week it can come below the watermark resistance, it will create a false upside breakout in both daily and weekly, and then I will like to short it. See how I am combining the signals on weekly, daily, both together. Now technically that is my conclusion. Fundamentally I saw it is weak, but I did not look at the industry score yet. So at this point I like to do that. Helka Mining, let's look at its industry scorecard. Okay, why my system is malfunctioning. Okay, I got it. Non-gold, precious metals and minerals industry. The score came down and it is showing very much deceleration, bottom 20% of pace score. So that allows us to short. So Helka mining industry score in terms of pace is allowing me to short. Fundamentals are weak both in terms of valuation and earnings growth, and technically it may give a false upside breakout if it can come below this watermark resistances next week, and that will give me a low risk short setup. It is at jump thrust high. That is also giving me extra confidence to short. So Helka mining, one possible candidate, not right now, but if the false upside breakout materializes, and I am left with one more stock, CLDX. Okay, let's look at it weekly, daily. Sometimes I may switch to TradeStation. You may use either TradeStation or MetaStock, both. CL, no, sorry, this must not be the stock. This is CDLX. Sorry, CDLX. CDLX has a bearish headwind signal, but if you applied the unambiguous checklists, it does not have a bearish headwind short setup. So I'm not going to consider shorting it. So I'm left with only one possible candidate to keep track of, that is Helka Mining, HL. So I may put it in my watch list and see how the stock moves next week. Now one more thing I noticed, and let me spend a couple of minutes on that. There were few bank failures in the USA, and then banks came down heavily. Most of the banks came down, especially the smaller banks. Then they stabilized. Not only banks but brokerages, even like strong companies like Charles Schwab, they also came down. And some of the robust banks, at least I think they are robust banks. I don't bank with them. They came down. And then some large banks announced earnings on Thursday, Friday, I think Friday. JPM was one of them, JP Morgan. Let's look at JP Morgan, large bank. It declared earnings, had a huge gap up open and continued to move up. So if you tracked it on Friday using intraday charts, you could think of taking a gap long trade. But notice when it gave a gap long setup on the 5-minute interval, it was probably already too close to the trend line resistance in both weekly daily. So we would not take a trade. That is how, though there may be an intraday trade setup, I always keep an eye on the weekly daily charts before taking the trade. And if I'm buying, I never buy if trend line resistances are nearby or watermark resistances are nearby, especially trend line resistances. So what I noticed is JPM went up. It's a strong bank, large bank, not one of the smaller banks. But the one bank that I analyzed in an earlier market recap, HOPE, HOPE, I first analyzed it in a live recap when it displayed the bullish headwind signal. And my conclusion was in that week that there was signal but no trade setup if you applied the unambiguous weekly daily checklists. So I did not suggest buying, I did not buy. Then came another bullish headwind just 1 week ago. Previous market recap, I again reviewed it, and again it did not have a buy setup, it had a signal. it is struggling to go up. If it can go up now, it may be a buying candidate. That will be a positive sign in terms of smaller banks going up. What can be a buy signal now? A bullish flow candle. First bullish flow candle after the bullish headwind. If that gives me a low risk entry point, that's a possible buy point. So that may come now in daily. On the other hand, if it breaks below the watermark support, that will be concerning. And not only Hope, there is another, I think, well-known smaller bank, Zion, also dropped sharply when the banks failed. Some of them displayed a bullish headwind, but on Friday reversed quite a lot. Weekly is also looking indecisive. If this trend line support is broken, that will be worrisome. On the other hand, if it comes to the trend line support and that holds, that will be bullish for the smaller banks. But if this support is broken, that will be worrisome. Let's look at Charles Schwab. I respect the company a lot. I am a customer of Charles Schwab, brokerage customer. This they have banks also. Dropped a lot, had a bullish headwind, signal, no setup. And Friday it pulled back. Again, it has a trend line support. If that trend line support is broken, it will be worrisome. The trend line support holds and it goes up with a cyan color candle, that may be a low risk buy point. And if we are looking at all these individual bank related, smaller bank related, Schwab is not a small company for trading at least. But let's look at also the KRE, regional banks ETF. Similar pattern, dropped heavily, displayed a bullish headwind signal, no trade setup, but on Friday it reversed sharply. Again, if this trend line support is broken, that will be worrisome. If the trend line support holds and gives a blue, not blue, cyan bullish flow candle, maybe not so long, cyan bullish flow candle, that may be a low risk buy point. But remember that all of them are struggling to go up. Even well-known companies like Schwab, the ETF like KRE, and I think strong fundamental stocks in terms of Xeon and Hope, they are struggling to go up. If the supports in all of them are broken, that will be a cause to worry, I think. But we'll see how it goes. I will not be shorting, of course, even if it breaks down. It's already too low in the price pattern. From a trading point of view, I'll be happier in this instrument to see a bullish flow candle that will give me a low risk buy point. On the shorting side, I'll not have easy shorting entry point right now. Already too much down the price pattern. So that was one observation I wanted to share, that Hope, Xeon, Schwab, KRE, all of them are struggling to go up. Not a positive sign, but if they go up, they will give a low risk entry point. With that, let me end today's session here. I have no preferred trading direction yet, but if the market comes down, that will be easier for me to trade because multiple market ETFs are at trendline resistances. Thanks a lot for joining me today. I look forward to seeing you in my next session. Most likely it will be next weekend. I'll share the date time on Twitter as usual. Have a great weekend, and as these live examples show, and I always say, if we follow a disciplined approach, robust approach like 360 degrees approach, top down, bottom up approach, there is no reason not to make some profit from the market. So trade profitably, and thank you.